Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your Dividend broskies here, Bert, the Hurt Locker, and Lanny. And guys, we're gonna look under the hood. We're gonna peel back the curtain. We're gonna bring two surprise dividend growth stocks that I don't think
Hmm.
anybody has ever talked about here on YouTube, damn it, and we're bringing it to you.
Bold claim. We'll peel that back in a second. But before you do, subscribe to the channel. Give this video a thumbs up for the first two times these dividend stocks have ever been discussed on the YouTube universe. Ever.
And if you You are fine. If you guys have seen any of these stocks after we cover them, let us know. I'd be curious. If you own these stocks, let us know in the comments. But as Bert said, subscribe, like. We're trying to get to 20,000 by the end of the year, but let's take the first step to 18,000. So help me help you. Help me help you. All right, guys. So we got two stocks. Stock market's volatile as ever right now. Bert knows we've been buckling up the last few weeks. Stock market's coming down because there's fears that rates are going to stay higher for longer, that the consumer is still flexing their, spending muscle here. And it's interesting because one industry may be benefiting from that. And then there's another industry that is still looking for the right people. So, Bert, how do we want to roll this carpet out for these two dividend stocks today?
Well, first, before we do it, let's talk about how we're going to look at them. Let's run them through our screener. We focus on three simple metrics: PE ratio less than the S&P 500, payout ratio less than 60%, that history of increasing dividends, and that dividend yield as the bonus metric.
All right. Well, we're gonna go stock by stock. We're not even gonna tell you both stocks yet. Let's do the first one. TNL, Travel and Leisure. And what is TNL, guys? They are the big Wyndham resorts, hotels, the whole portfolio of Wyndham. Um, you know, International, you name it, they cover it. They help, own and manage it. Pretty big company, over a couple billion by market cap. Obviously they had the unfortunate out of left field, only happens once in 100 years, COVID, the pandemic. And during that time period, obviously everything was pretty much at a halt. They actually reduced their dividend. They didn't completely cut it to zero, which was surprising.
Yep.
But they did reduce it during that time period from 50 cents down to 30 cents in the third quarter of 2020. So I just want to at least wrinkle that in there.
Yeah. If there's a sector that it would make sense, it would be this one. But let's run through what's cool about Wyndham is they have brands for everybody. They have hotel brands that span all different types of travelers, all different locations too. You have your high-end brands, your Wyndham groups, all the big ones on their website. But then they also have Baymont, Ramada, Super 8 Days in too. So they serve the small towns, the small communities, and the people that are just trying to find a place to sleep while they're going on the road. So that's the cool thing about a place like Wyndham.
Yep. And, again, they have all-inclusive resorts as, Bert was, kind of relaying. And
Mhm.
hey, they're doing some pretty cool things. I mean, that last earnings release, they just announced that they're going to continue to repurchase more shares. They actually have done $200 million dollars worth of repurchases in 2023. They did reaffirm their guidance, which is,
Ooh.
surprising during this tough time, right?
Yeah. I mean, how many companies have cut their guidance there? That's the craziest thing. So, when you look at the financials with them too, they're seeing quarterly growth. They're seeing strong, 3% growth. Net income, even though it was down slightly, it's still at a pretty high level. It's still just went down 6 million from 100 million to 94, but they're still pretty substantial levels. And yeah, I think they're looking strong right now. That's the kind of cool thing about Wyndham. So many people are traveling. To your point, you hit it right on the head at the beginning of it.
Yeah, last quarter they earned $1.25. So we're actually going to take that and just annualize it out over the next four quarters. But let's look at the metrics now, guys. So they're trading at $38.35. They're actually up this year, 8.5%, down 10% last year, but up 8.5% this year.
Let's run them through the screener for the rest of it. Their price is 38.35. Using that $5 earning per share, that's a P ratio of 7 6.67, single digits, seven.
Yeah, wow, it's pretty impressive. And guys, even though they cut it down to 30 cents during the pandemic, they've been climbing that dividend as fast as they can, it looks like, because it's back to 45 cents a share per quarter or a buck 80 per year. 36% dividend payout ratio. So very safe, below the 40%. Even if the forward earnings is slightly lower, you're still going to be very safe from a dividend standpoint.
Safe. So let's talk about that dividend growth here. Obviously, they've been increasing it every year. We've talked about that. The streak's low after the cut. So it's what, 3 years right now? Working
Yeah.
back up, that 5 year growth rate is 14.5%. So still, again, got to work back from the big dividend cut, but they are coming back swinging, and that's the really important thing here with Wyndham.
Yeah. So yeah, I mean, so that 14.5% actually only going to consider the years of growth. So that's pretty good.
Yes, a
But yeah,
3 year dividend growth rate. 3 year dividend growth
yeah,
rate.
yeah, that's yeah, good asterisk there, Bert. The dividend yield, though, I mean, this is what's wild is 4.69% for this stock right now.
Ooh, I love it there. So that's above their 5 year average yield, which is at 3.98%. So again, very solid there. Potential sign of undervaluation here for the Wyndham Group or Travel and Leisure, whichever one you want to
That
call
leisure. I mean, Bert, have you ever even considered this industry?
it. Nope, not one bit. I know. I mean, I've thought about Hilton. I've thought about Marriott. Um, I've never really considered TNL, and I mean, there are other ways to play this sector too with your VGs and your other dividend like stocks or REITs out there. But I've never actually taken the time to go down and sit there and say, yes, I'm going to look at a hotel stock.
Did you guys ever use Wyndham? Did you guys?
Oh, I'm sure we've used them all, but yeah, I think I don't know. That's a great question. I'm trying to remember. It's not usually my preferred. It's not my top one. It's always usually Hilton or bust, but we'll see from there.
Cool. Well, let us know, guys, if you own TNL. Let us know if you guys are Wyndham Rewards members or if you guys only stay at Wyndham's. Let us know in those comments below. Is this a stock to buy? Keep
Hmm.
us posted. So
Hmm.
we're going into the next stock, guys. We need some power here. We need a group that's powerful. We need Manpower Group. Ticker symbol is man.
Yes, I raised my hand a little too high so you couldn't see it. We got one. The ticker
Got another
matches the company name. We did it. Yes. Yes. Yes.
Daniel Bryan.
Yes.
We'll call
We
him Burt Bryant.
woo. All right. Let's do this, everybody. The Manpower Group, the third largest staffing company in the world. I, I'll,
Wow.
I'll just make this very bold claim. I said I've never considered a hotel stock. I have never considered a staffing stock before. So I gotta say, I'm very interested to go through this one.
You
This is
know,
a
obviously we hinted that, yeah, I mean, this is an industry that has, you know, been busting their, behinds
yeah,
trying to figure out a way to help companies find good
yeah.
people. And it's
Let,
not easy.
No, it's not. It is not. And there's a valuable service for this too, especially for a lot of those companies that are nationwide that may not have the local expertise. They may not have a niche expertise in a certain sector. Like just because you have in-house recruiting doesn't mean they know accounting and finance like specific candidates. Doesn't mean they know tech recruiting. Doesn't mean they know even HR recruiting. Like it's crazy the role that these companies play.
Now, again, they've been around for a while, through a few business combinations to form this company here. Again, as Bert said, third largest in the world. The one caveat here is they pay a semi-annual dividend. So you have to keep that in mind. Obviously, I know how Bert and I both feel about it, but hey, don't hate the player, hate the game. There's plenty of great stocks that have paid semi-annual dividends that we're aware of. But Bert, we're
Diageo,
gonna
Diageo.
but
Let's
Diageo,
that's a
but
great.
but Power Man Group or Manpower Group is based, I think, in the United States. I think that's like the one funny
Oh,
difference about it
yeah,
is
that's a British thing. That's a British thing. All right, so let's talk through this. Let's run them through the screener. Their price is 74.10. Earnings per share is 5.99. That's a PE ratio of 12.37. So
wow,
it's kind of
wow.
compared to the S&P. You'll take it.
I will take that. That's pretty solid, Bert, if you ask me. Now we're going to
Cheers.
that dividend payout ratio again, since they pay $1.47 every 6 months or $2.94 for the year. Payout ratio is almost Perfect at 49% for Manpower Group. Or
Mr. Perfect. Let's talk about the
watch.
dividend history. They've increased that dividend for 12 plus years at a 5 year dividend growth at 7.87%. Voila. Beautiful.
Wow. Guys, just to repeat that, 12 years at 7.87%. And that last increase went from $1.36 to $1.47. So if you do the quick little number math, Bert probably already did it. 8.1% was the last increase. So Bert, what that is right in line with the 5 year average.
1% increase. It is. It is right in line with it. So it's beautiful. And for the record, I did not do the math. For the record, there. So let's talk about yield. Their yield is very strong. I was very surprised by this, to be honest with you. 3.97%. So I mean, I guess the obvious joke here is it's easy to pass through a pretty high dividend yield when you after you collect those really high staffing fees that come along with
Yeah. Yeah,
it.
and we're talking sometimes, yeah, they get paid up to 35% plus if it's worked into as a percent versus flat. The very good
Yeah.
stipulations for these staffing places, plus if they're actually placing people temporarily, maybe some temporary staffing for your organization. Obviously, you have to pay them an hourly rate, and then they keep a margin, pay
Mhm.
the temporary staff person.
Yeah. And then
I mean, Bert,
there's the buyout of the temporary staff people too. Like the company can buy them out for you, pay you a fee, and then they just keep them. So it's like you're trading. Like it's wild how many different ways that fees can be had.
how surprised are you by the stock?
I mean, I'm very shocked. The metrics look great. I was not expecting this. To be honest with you, but it looks great. Well, I don't know why you wouldn't watch it. I mean, I want to learn a little bit more about the industry and the financials, but like, that's why we do the screener, everybody. This is why we do the screener. We don't just buy based on the results of this. This is the leading indicator that says, yes, it's time for me to take more time and do more research. And heck, yeah, I see why this company earned more research. What do you think?
Yeah, I would agree. We wanted to come out with this video not talking about Johnson and Johnson stock, not Kenvue, Verizon, AT&T. What am I going to do with Paramount, Warner Media, Discovery, whatever they call
Yeah, because
themselves?
that's what everybody wants to hear. What are
Yeah,
we
we're not talking about Beachy, Realty Income. We're not talking about the high profile names right now in the industry. Obviously, great companies, great stocks. Nothing against that. Obviously, you've heard me talk about UPS stock and CVS stock till the end of time. But guys, we brought two stocks that are definitely under the radar here. I'm definitely going to be looking at Manpower Group simply because the soundness and all of the metrics, it doesn't have an unusually low PE. It's got a safe dividend payout ratio, solid yield, and a solid dividend growth history.
Yeah, and that says it all. So everyone, let us know what you think. Let's not forget about travel and leisure. We talked about them first. Let's also talk about the Manpower Group. Let us know what you think about those two companies in the comment section below. And if you've seen other places that cover them too, we'd love to hear it.
Yeah, are these two stocks to buy? Keep us posted, guys. Again, Bert and I want you to keep saving your money, invest as much as possible, get to gosh dang financial freedom, not by yourselves, but with us, your favorite dividend broskies here on YouTube.
That's right. And if you haven't already, again, subscribe, give this video a thumbs up. And Lanny, what do we tell the viewers?
You're either with us or you're against us. Jack, that was Bert and Lanny from the DD. Over and out.